Hello, trading is closed on October 29th, 2018. My last call said unless we gapped and promptly took out these lows, the higher prices should print. The pattern was the one with the early high. It tends to have a late high and rally all day, but if it fails, it goes down in a straight line just like this. During the day, MEJT said this is a false move. Target's 2683.04, most likely to print tomorrow. That's what the system says. Well, I can remember days when we had a 3-point range all day long, and I didn't trade those days because even if I were right, I wouldn't make any money. Today we had a 103-point range. I was at work, but I don't think it's smart to trade days with ranges like that either. Not for me anyway, because if you're wrong, you lose too much money. So I'm going to try to say what I think is going to happen, but I want to stress that I'll be at work tomorrow and I'm not going to risk any money on it. And if someone else risks money on it, that's up to him. At Friday's close, we had to rally over 30 points to hit the target, but we did. Target for tomorrow is over 40 points away from today's close, but unless we gap under this low or take it out promptly, I'm going to say that's going to print. Now, this is a pattern which usually closes at the day's high when not at least to lower prices. Does not mean we have to go under this low. We also gapped up, hit a higher high, and closed under all these highs. It's a negative pattern, should lead to lower prices, but again, doesn't mean this low has to fall. I do have significant support at this low, which doesn't mean the drop's over by a long shot, but there's a good chance if we don't take this out early tomorrow that it'll hold for tomorrow at least, even though tomorrow's pattern is the one with the early low. Just because the pattern has the early low doesn't mean you won't gap up first. This is a futures chart. You'll notice how volume spikes over 3 million shares tend to have a time relationship with at least short-term lows. See that. You also have large point ranges, and over 100 points is large. Tends to occur at the end of moves. This range was actually larger, but typically big moves on big volume often, but not always, will appear at the end of a leg. I have that one twice. 1 second. Guess I had that one twice. It's inflation for you. I said months ago that I expected at some time when this consolidation was over to have a drop comparable in magnitude and force to this drop here. This is 340 points. This one's 336. That's pretty comparable, so that achieved my objective. This drop here is also a Fibonacci target of the prior consolidation. This target, this low, is also a Fibonacci target of this consolidation, as is this high. If I can show it. It's part of the same pattern, and when you go up with the Fibonacci, you usually drop with the Fibonacci too. We also, in spite of this down day, closed over these prior lows, which means the drop didn't really accomplish anything. vicious as it was. You can see how not only did we take out yesterday's lows, these lows have held. And what's also held, if you look at the RSI and the CCI, is this is higher than this. And there's a big divergence here among secondary indicators. So while we're dropping, secondary indicators aren't. But the real important thing here is when you connect these lows, you'll see the trend line goes back down to 2006, and you'll see how significant it is. These lows, these highs, line up perfectly with these. So we have support which lasted 18 plus years. We dropped to it, but not through it. And typically when that happens, if you're going to break through it sustainably, you're going to gap under it. If you don't gap under it, it means you retrace. It doesn't say how soon. So I'm not risking any money on the call, but absent a huge gap at the open, it wouldn't surprise me if we saw lower prices, but I think the odds are good that this is going to hold. And this is the target with resistance over the target. Longer term, we still have trouble, big trouble. And the call for tomorrow, in my opinion, has too much risk on the downside if it's wrong. But I'm going to go with it. And that's today's call.